Do we want to, just keep this between me and you? If you want to keep it between me and you, then I'll upload it to YouTube. It'll be a private video, and the only way you can watch is if you have the link, which I'll send to you. So I just like to do YouTube because it's easier than trying to send you the file, and then it's so much easier to like watch it back. Like the playback's better on YouTube and anything than any other way of sending it. So um, yeah,
That
so
all sounds fair to me.
yeah, so let's go. We'll go. Okay, so yeah, you should be able to see this screen here. Is that correct?
I can see it. Yeah, I can see it. Yes, sir.
All right. Um, so let's start like your list, right? You said picking my brain on setting up charts in Tradeovate. So I don't use Tradeovate. I use Ninja Trader Desktop. Um, the reason I use Ninja Trader Desktop is because in some ways you have a little bit more flexibility that I like. But it's a pain because Tradeovate and Ninja, they're the same company, but you don't have all the same uh like features in each platform, right? So like NinjaTrader is great because I can have multiple connections open at the same time. So I can be logged into Tradeify, I can be logged into Lucid, I can be logged into Apex, TPT, my personal cash account, like all these different firms I can be logged into all at once. And all I have to do is click the drop down or use the trade copier, which is an added thing, which I don't advise for most news people because it's just a faster way to lose money, honestly. But you can use the trade copier and trade multiple prop firms at the same time. And so a lot of people have had great success with the trade copier using it's called Replicanto, which I will type it and send that name to you right now. I think it's with a K, Replicanto. Um, so that's like a third party software. Whereas like inside of Tradeovate, you have to be logged into that particular broker or that firm. So, if you want to trade your TPT accounts, you have to be logged into TPT. If you want to switch to My Funded Futures, you have to log out and then log back in. There is a copier that's built in, but you can only copy within that one firm, which isn't bad. If you were just say, okay, I'm always going to trade all my firms together. So all of My Funded Futures is one trade, all of TPT is another trade. It's not like it's a bad thing. Um, but you cannot incorporate Ripster clouds into Tradeovate, sadly. I know they're still working on a lot of backend upgrades to Tradeovate, but you can't do that. The only way around it is to essentially just do like EMAs, and you won't have a cloud between the two of them. So, uh,
Never
otherwise,
utilized
what?
Trader. I've never utilized the Ninja Trader charts. I mean, obviously, I have an account, but I've never utilized their charts. I've always used TradingView or
Mhm.
or Trading TradeBait. So yeah, I'm Ninja Trader. I'm a novice at that.
And that's fine. Like if you don't want to end up using NinjaTrader, then that's totally fine. So many guys are using Tradeovate. Um, and I think it would be good to get some trade of eight tips, in-house stacks. But I don't know that I think honestly you could get a lot out of YouTube, right? Like that's probably your best bet with question number one. Sadly, you can't use Ripster clouds, and I'm a big fan of the cloud. I personally like this multi-time frame cloud. I consider I kind of like it's nice that it's here, but I always think of it as like a pain in the butt. And like this was an amazing multi-time frame cloud short here today. I just didn't even see it. But the rest of them though, like the 3450 and the 512, like that whole system is pretty great. Um,
Yeah.
I don't use volume all that much, even though I have it on the bottom. I'd rather have it and then just like hide it versus, if sometimes it's useful just to see in back testing and review what the volume was. Um, but let's talk about in terms of like finding trade setups, right? Um, So you have discuss one or two, for now, that would be great setups that are often utilized in the house of stacks or that I utilize and have seen good results with, right? Which we can talk about the buy red, sell green theory at the same point. So here, like today, here's a good example of this would be sell green, buy red, right? And so where we have an initial move up, right? It fails, it rejects very hard, and then you get this candle by candle flip, right? So now it's at 10:30. This is tough because like when all you have is this, it's like, well, are we really going to go up or really going to go down? And that's where if you wait for it to pull back about, and I liked personally, if I'm going to do it, like to have it pull back about halfway into the body, which would have been like damn near top ticking that candle. You would have been in, let's see if I draw it again, you would have been in right around here at 36, and the high of the candle only went to 41 and a half. So you had like 5.5 points of drawdown against you. And I bet if we let me see if we go down to like the 2 minute, I bet you we have a nice 2 minute EMA rejection there. Oh, the wrong day. It moved me forward. Yeah, we do. Right. So 2 minute, we move down under the 2 minute, 20. We cross back over, no strength, come back down underneath. Right. They try again. They broke the low here. They try to push it back up, but you're just getting weakness. And that's where you get a new 10-minute candle that flips back down. Right. So Maple's really teaching the 10 and the 3. I have stayed on 10 and 2. That was the original method, 10 and 2. I feel like I really perfected the 10 and 2, but the 10 and 3 would have worked really well here too, because you can see we're back under the 3-minute 20 EMA. And the 9 EMA is basically crossing down under it here. Uh Let me see if I have, yeah, this is not good. I don't want to do that one. That looks ugly. Let me just put on, edit my studies here, and I'm gonna put on the 9 EMA, and we'll just focus on having the 9 and the 20 on, because you really don't need much else for the trading strategy. Okay. Okay. All right. So there's the 9 and the 20. So when we go back to the 3-minute chart, yeah, you see the 9 is like obviously pointing down, and they're getting pinched and ready to getting pinched and ready to go, right? It's ready to cross. That's right here. Let me hide some of these other studies, get them out of the way, make it easier. The other thing is like the obvious ones do not to take, right? Like don't take this, don't take that. Knowing when that a strategy is not going to work is really important. So some people will get caught up in these weird situations, like right here, for example, where they're like, well, I sold it when it was green. Like, why isn't it going down lower? And it's when this is a thing that I've like to call the order of operations. If the first thing the candle did was break the low of day in RTH right here, and then it gets bought up, and you're seeing very strong 1, 2, 3 minute candles, it's not a short anymore. Like, I'm not saying it's a long, but you no longer have short confirmation. And knowing to sit out of this trade is a great way to make sure that you don't lose money unnecessarily, right? So, and Maple's been taking more of those trades as like the fake out breakouts, which, I see that very clearly. Like on the 3 minute, we broke down low here, we closed here. The problem is that like there's like no pullback on this candle, it just goes. And this is a really hard long to take, right? And then what did Maple do today? I'm not knocking him. But you know what? Maple tried the long in this general area, and he took the L. Took the L on I think on SPY calls, and then on ES. It was this very similar look here, right? But like, why doesn't this work? If you're looking at this and just reading the price action, which is the best way to learn, is to just look at it like, okay, what happened on this candle? And then they pushed, right? And then they did this and they did that. And we're just reading the dialogue and writing it out. Order of operations here. Very hard to see. Very hard to see, but I'm going to zoom way in. What happened first? We broke that candle's high. We broke over the high. What did we do? We knifed.
I'm going to take some notes while you're talking, Joe.
That's okay. Yeah. Take notes, and you'll have the video to watch back too. So, like, again, if I'm just gonna move this circle here now to this, because this was one of those things that I was kind of like, damn, Joe, you should have taken that short. Or even just take profit better on the longs, right? So here we are on the 2-minute chart. 2-minute chart, same thing. The high of this candle is 25 772 and a half. The high of the next candle is one tick higher, just one tick. It went one tick higher and then a knife down lower, and you almost got the CBC flip here on the 2, but you're basically back down right at VWAP. The next candle's under VWAP. The next candle closes under VWAP. Like, yes, you were, if you wanted to try the long and you were buying in here, which this is the mid orb level. That's why it's a dash line. That's the middle of the orb. You're right between the 9 and the 20 on the 2-minute chart. On the 3 minutes, you barely touch the 9, so it's not quite as deep of a pullback. But uh you'd have to be really good with your entry, and then you got to be pretty good at scaling because you would barely get a little more than 15 points.
Right.
Um
Okay.
so like, and that's and to be honest, Uh, I don't know if I've already shared it with you or not, but I will share with you right now. There's a document. I posted it it's in my vault, but it's also something. Share, copy link. I'm gonna send you the link right now. Um, that's really the thing that's helped me a lot is like having these like strict rules. That I get in, I take profit at 15 points. I'm moving my stop up after 12 points, and so like, if I got in here, I this was not a losing trade for me. It might have been break even, depending on where exactly my entry was, because from the actual low here to the very high was only 23 and a half points. So getting 15 points doesn't leave me a lot of room for screwing up there, but I move my stop to break even, and that's it. Like, I'm not taking the losing trade, and I'm mitigating like my losing trades a lot. And am I having more quote unquote break even trades? Yes, but that's personally what I have found that fits my style because I trade much more scalp and not such like big moves. But the scalps have been consistently paying as I've shown, right? Um, but let's just try to go back and find some good examples of buy red, sell green. So here's an example of buy red, sell green. I don't know what Maple did off the open, but like off the open, like what did you have going into the open? This is what I would always like draw back to. Okay, so I have an attempt at breaking a pre-market low and taking it lower. That attempt has failed. We move back up here. We get a doji indecision, and then into the open, I have the bulls take control. So now I know this area is obviously demand. And when I see that we've wicked down into this area and we start getting bought back up above this candle's open, I'm really starting to like this for the long. Like I know we came down here, we opened at 6, but we came down and then they really started to hold this. And this is on the 5-minute chart. So let me go back to the 10. I didn't realize that. Yeah, 10 minutes still flip the CBC back long. And then so same rules apply. And then on the 2-minute chart, 2-minute flipped bearish, but it barely closed right there, barely closed lower. The next minute flipped back bullish. So realistically, like that for me is the confirmation is like now I have 2-minute candle by candle flip long. I have my 10-minute is long and I have my 2-minute is long. So if I've got those two long, if I got those two long, then okay, I'm good to be looking for longs. And the EMAs are basically about to cross. So now this is where I like really have confirmation to buy red around '03, and then sell green when it pops up around like when this happened probably in less than 30 seconds. You get 15 points. And that's for me like where a lot of these trades sometimes they're just quick because it's like, okay, well, I see this setup. I like this setup. I see what the price action is setting up for. I know where what's likely to happen. And like, I'm not an ICT guy at all because I think there's no such thing as ICT. I think obviously we know he copied all of his stuff from other traders and then put it out there uh, as his own, just rebranded it and renamed it. But he often talks about and other like smart money concept people, they all talk about like liquidity, like targeting liquidity and this, that, and whatever. And it's just like, well, there's any number of ways to say it. People would talk about like pivots or the price action or whatever. And it's just like, or auction theory. There's a million names for it because there's nothing new under the sun. But the point is that like looking at this 10-minute chart from today, these green dots right here. This is the London opening range. This is the London session, right? So the London session opened here at 3 a.m. and traded down. And what did it do? The London orb low, the London 30-minute low was respected, right? Respected, pushed down. So now we get this big push down where these buyers all stopped out. So, when we can't push any lower, what are we likely to do? We're likely to go, and I would say at least immediate target is breaking VWAP and breaking these highs and trail the runner from there. And then the very, very easy target is the 10-minute 200 EMA. Like these are all like, so again, like I said, the entries down here around like 5, 6. Where's my first target, right? Like, well, I would take 15 points, and then I have my set bracket. I take 15 points, I take 25 points, I take 35 points, etc. Right up here, it's already at 70 points. So then once I break VWAP, I'm just trailing a runner. Like I'm just letting it go and it's gonna give me what it gives me. But if I had more cons to trim, I want to trim at the orb low and VWAP area, and I want to trim at the London orb high area because it's very close to the 10 minute 200. And then for me personally, just the way I mark price action, I always mark a gap from the 4 p.m. closing price of the prior day to the 9:30 opening price of today. I draw it as a fib, and this is the golden zone of the gap rejection. Like I know that this morning I called it out in Stacks chat. Watch, we are where we are because we are at the golden zone of the gap down, right? So we gap down, and this being the golden zone of that range. And I've got like 3.5 years of studying this. Like, I know it works. I know when it's like, "Uh-oh, watch out?" And this was so strong that I wasn't immediately looking to take the short, but obviously the short did work, and it sent it all the way back down here to the same demand zone. We get a little wick down below, and then what do? We pop up essentially right back into the same supply zone. So whether you wanna call that liquidity or whatever, like, it's 6 of one, half a dozen of the other, is the same damn thing? And then where do we push into at the end of the day? Right towards the end of the day, what do? We wicked right over this. We wicked over this and we trailed down the rest of the day, right back into VWAP. It was a crappy day. Um, but sorry, that was a very long-winded buy red, sell green here. He does that like pretty uh aggressively, I think, off the open. And I think most people should be sized down, half size, third size on the open because it's so volatile and give a little bit of a wider stop. Um Here's an example. All right, well, it flipped back red. The 10-minute EMAs never crossed. So now, because we're back to bearish, you could sell green and cover red. But like this is a little piddly move here. This is like 12 points. It's tough when you're in the range. Where that works really well is when you break out of a range. So here's a great example of it. You have this very nasty doji, your overnight range. Let's see here. Yeah, your overnight range and your closing price from yesterday is all sandwiched in this area, right? So then when you get this, I'll zoom in even more. You get this nasty doji here, nasty doji here. It's like, what are we going to do? Well, obviously, we have a problem. We're not breaking lower, right? Um, and we are holding you. This would be another like box. This is like your London opening range is right here. So they continue to hold under the London lows, right? The London traders are holding under their lows. They pushed out, but they're still holding under their lows, trying to push it out. If you just simply waited for the 10-minute CPC to flip, right? Like you would be here, and then what are you doing? You're buying, like, when this starts to pull back down, you're buying here and you're selling up there. Like, I don't know how much that gives you. That's a tough example, but like you just barely break out of the range, and then you definitely need to be trimming above these highs, which is what everybody else is doing because it forces it right back down. Um, this is like a fake out or a flop of a flip because even though it flipped, you can see on the same candle they were buying it up and supporting at VWAP and the EMAs. But here, candle by candle flip back long. Once the candle by candle flips back long, you're good to go on long entries, and that would be in there, buying red and selling green. Let me go down to the 2-minute chart, and we'll look at that more closely. I have to go backwards. No, I have to go forwards. There we go. Yes. So on this first one, you're a bit like this is the opening part of that 10-minute candle. You're a bit extended from the EMAs. Um, I probably would have already been in, but that's just I'm probably just more experienced and better skilled at reading price action, and I like how this looks. Especially that they came down and the low of these candles are identical, and they couldn't flip the CBC back short. So they pushed up, couldn't flip the CBC back short. Uh-oh, big trouble for the bears. And it goes. This one here is like as perfect as it gets. Like because it's sitting price is sitting right on the 2-minute 20 EMA. And if you didn't like it, you could have waited for it to pop up or whatever. But a lot of the times, what you get that happens on these candles is it'll go down, and sometimes it goes down even further, which is great. The further it goes down is great, right? And then once this starts to come up, like if it breaks the low and starts to come back up, or if it breaks the low and it doesn't break the low, whatever, but the candle turns back green or white in my case, I like it for the long because then it's like, well, we've already failed to move back down. So, that's either there's not enough sellers who want to keep selling this low or whatever. And so now I can get in here. This is at 23. I'm risking this low here. This this is ridiculous too. Like, because even if I got in at this level right here, it's 24 and a quarter. I'm risking 5 points to that low. Like enough so that like I can risk more and be comfortable with it. Like here would be 15 points right on VWAP. So it's like, okay, we're trading in a relatively tight range, but I see how this is setting up, right? They pushed out of the opening range high. Then they came back down to VWAP. VWAP got support. They rebroken the opening range high, come back down, nestled on the EMAs, right? You could also say that you had like this where they failed. So you can see that these sellers really failed to push it back down, right? Sellers are here, they push it here, they fail, it gets bought back up. Now those sellers get pushed out. These sellers here who were trying to re-engage from this move, because I bet you, yes, this is just barely, but it is a golden zone retracement. You have a golden zone retracement there. Those sellers who re-engage, who wanted to push it down low, have now failed. When those sellers have failed, the buyers are picking it back up. They have pushed the sellers off sides. These sellers here want to get out, and they get out for almost precisely break even, right? And now they're out, and those sellers evacuating their position will turn into buying pressure. And so I know, hey, I see this structure. I see the way this looks with those failed those failed sellers turning into buyers. If I get in when this candle is green, all I'm risking really is a little bit under this candle's low. So let's call it 10 to 15 points max. But this is so great because the risk is so low. And from this entry at 24, where do we get 15 points? We get 15 points like right up here. So you're in 2, 4, 6, 8, 10. You're in 12 minutes. This is a long one. This one took a little while to actually pan out. But then once it does, you scale 15 points, you move your stop to break even. Then I would get another scale probably at 35 points. That's right here. And I can move my stop up maybe to like plus 10 points. So now my stop is here, roughly, let's just say. It comes back down, it touches the 2-minute EMA again. Often a great place to rebuy as they're now trying to break in base on this pivot. These sellers who have failed are now turning into buyers again over here. Same thing, and you get another big move. So that's where and from there, if we go back to the 10-minute chart, and what I'm going to do is, give me 1 sec. I'm going to save stuff. How's this? Did that right? Okay. Go here we can just flip back and forth between the 10 and the 2. Let's just so now in all these examples, right? Like we just covered this one. 10-minute CVC is long, buy red, sell green, right? So you would trim it, really here, You wanted to, I mean, it's a small candle. So this is like if you entered in here, like I said, around 23, 24, you're waiting to sell green up here. But at least you can move your stop up or, trail it. And then he'll sometimes do like buy red, sell greens on like these, and I don't like this one's a bit extended, and you can see now it had a big pop, but it doesn't always. And then it's harder later into the day. But let's see if we can find another good example. And like I said, once you break out of the range, it's a little bit easier. Um, Even here though, inside the range, what you're gaining from inside the range on this one is wow, this looks a lot like today, doesn't it? Huh. Yeah, the beginning part of the day looks a lot like today. Um, but like they failed to break it down. You get a tweezer bottom here, which is tweezers, the two long tails, 10 minutes candles holding. They held the opening print, they held the opening range low, reclaiming the EMAs. You get a doji and then it pops. So buy red, sell green, essentially buying all the red, selling when it pops up. No 10-minute CBC flip. And even here, you get a 10-minute CBC flip, but it's right off of the opening range high, and it just goes for the rest of the day. So like this is only 25 points in drawdown from like, well, maybe a little bit more, right? 27 points from the high here. This is like one of those very long, grinding, gliding EMA setups, and then it just takes off. And so if you waited for confirmation and you got in somewhere over here, you ride this out. I mean, it only goes 42 points. This is a pretty weak one, 2 days before Christmas, but that's Christmas volume for you.
Yeah, yeah. Quick question for you,
Yeah,
Joe.
shoot.
So the CBC flip, in a lot of cases, that is not a standalone philosophy. That's more of a once you're in the trade philosophy in a lot of cases.
Well, um, the CBC flip, like, it definitely can advise you when to get out of the trade, right? Like, if you're long, like let's just say you were long up here, like you were long anywhere in here. Well, candle by candles flipped. It's like a good idea to get out, right? Or if you were trying the long from here, you're in long, it pushes up, great. Maybe you trim a little bit, but then when CBC flips back short, it's like okay, this isn't working. I should just exit, right? Because it's not likely that it's gonna flip back long and just keep going. That's less likely. So the CBC in and of itself is more of a trend following system, like in conjunction with EMAs, right? It's really about the balance of power, who's in control. And then
Gotcha.
so it won't give you a signal to enter all by itself, but once the CBC flip has fired, depending on the overall context of the chart, you can get like a secondary move, a follow up move in that same direction with its higher probability, and be able to scale that for good profit. You know, and so a lot of those can be scalps, but if the market runs, it runs. And that's the thing that Maple's pretty good at is "Hey, I'm going to get in, I'm going to trim some profit, I'm going to take half off for 15 or 20 points, move my stop up or whatever, and then um, scale and trail, right? Like here's a good example: two super big bullish candles off the open, right? Like you're looking at a range here from the first is 216 points. So it goes 216 points in the first 20 minutes and then it proceeds to consolidate and pull back for a while. But what does it do? It pulls back right into the golden zone of the day. I mean, I don't even need the fib because I can see we just barely broke outside the orb. And here's the mid orb level 50%. So I know we pulled back about halfway. Like this being a CBC flip long, some people for sure took a stop on this, right? Because if this flips back long and you wait and it's pulling back and you buy it when it's red, because what did this close? It closed at 41. If it pulls back about 15 points, then you're in maybe of like 20, 25 area, and it goes down to 60. Yeah, so you're not holding 60 points of drawdown.
Right. Right.
So that one didn't necessarily work. And like any system is going to have trades or whatever that don't necessarily work. But that's why, like I said, if it's going to be buy red, sell green, I like to know that we're outside of the opening range.
Yeah.
It's less likely to work here. The rest of this was just kind of like price action, reading the chart, and again, order of operations. Okay, like if we look at this, just like reading this price action, it pushes up. What happens? It breaks the orb high. When it breaks the orb high, it comes back down and it closes back in here. That's not good because now it's closed below this current candle. You broke the pivot high first and then you came down, right? We'll look at this one on a 2-minute chart to see. So I'm just marking the top of that candle. And then, you do this chopping, etc. Right? Like you broke the high of this one and you closed just barely above it, right? And you came down and you flushed back below it. Now you get this candle. This one's huge. Why is this huge? Order of operations. We broke this low and then fired back up and flipped the CPC. So it's like me personally, sometimes I'll see this when we broke this low, and it's like, well, shoot, if I get in here at 86, I'm only risking, well, okay, that I'm risking 25, 30 points on this one, right? But like I have pretty good idea that following like this is a seller exhaustion candle. Like sellers move is back down. They flip the candle by candle short again. They couldn't break this low. Then they couldn't break this low again. Then when they finally do, they get bought back up. It's like, sellers are tired. These are very bullish EMAs. They're very wide and far apart. This isn't looking good for the bears. It's looking better for the bulls to go back up and do what? Retest the orb high, retest high of day, which is exactly what happens in a choppy sort of fashion because that's what the market wants to do is shake people out along the way because it's an auction process, right? You want to get everybody wants the best buy and the best sell. Same thing here. Candle by candle flip. Okay, great. Next candle, order of operations. So you're telling me that we get a bearish candle by candle flip. The bears are supposed to be strong, and then all I do is break this candle low by a few ticks, and and then they push it back up higher, and they close here. This is another, just like this, another seller exhaustion reversal setup. So when this flips green here at '07, well, I can be risking like just basically about 15 to 20 points to this low, targeting, even if it's just targeting the open of this candle, that's like 40 points. So if I target the high of this candle, that's 30 points. My first scale is at 15. So I approach the market like, hey, what am I likely to get from this trade? If I, do I really think I can get 30 points? Right? If I think I can get 30 to 40 points, then absolutely I'll take that trade because if my first scale is at 15 and scaling at 15 is my base hit and scaling at 15 and taking those base hits is my version of Moneyball, literally. You've seen that movie, the baseball movie
Oh
Moneyball?
yeah.
Yeah.
Oh yeah.
Yeah, so it's like that, and like that's how I approach the market is like let me play Moneyball, right? Like let me have a high on base percentage. Let me have a high winning trade record because if I get like even if my winning trades are only 60% and then my break even trades at 30%, that means I only got a 10% losing rate. Like that's great, right? Like it's kind of like saying 60% of the time I get a base hit, the other 30% of the time I get a walk, and then like 10% of the time I strike out. It's like okay, put me up to bat every time, you know? So yeah, we'll zoom in. Let's go back and find this. Here we go. So like in terms of looking at the 2-minute chart, right? Okay, so the first one, like I said, this is the opening of the 10 a.m. candle. The first thing at 10 a.m., what do? We pop up. The next thing we do, we pop back down. Like it's over. It's over. I would not be buying this long off of the EMAs or any of that. Why? Because the first thing we did was break higher and then we rejected. So order of operations, we broke higher, we rejected, and now what are they doing? They're just slowly taking it down. Looks like a lower high here, not good. They could have flipped the CBC back long here, and they failed. So it's like, dude, the buyers ain't got this. I'd be if I'm like if it's like, well, if you had a gun to my head and you said, Joe, which way are you gonna pick? And all I had was these candles. I want to pick short. Why are you gonna pick short, Joe? Look at this big move. Well, because the first thing we did was break higher, and then we're closing this 10-minute candle, and we couldn't even flip the 2-minute back long. So if I'm gonna take a short, and yeah, it's high risk. I'd be risking 38 points to the high there, so we'll call it 40 points over the high. But where am I going to target? Like I'm really going to probably be targeting this cluster right here, this cluster of upper wicks, where sellers were trying and taking profit was happening. And then look what happens when we wick down to that same area. That's the area we bounce from. Never goes lower than that for the rest of the day. See overeager sellers who were like, oh shit, I just really got pushed out. Maybe they added to their position here. They're like, yeah, I'm getting out over here around break even. Like that's fine. And then you get a little micro pop and then it comes back and then it wicks a little bit lower and then it goes. So, like I said, order of operations, 11 a.m. candle. The first thing that candle did was move down. And then when that 2-minute candle closed, where was it? It was back up here, back into the range. So it's like they tested the waters. They know where everybody's stops are going to be. Bull stops are going to be under here. Bull stops are going to be under here. So then what do? They take out the bull stops, snaps back up. When it snaps back up, it's like, okay, well, now this candle's starting to turn back green. If I get in along here at 80, yeah, it's about 20 points risk to that candle's low. But where's my target? My target is this most recent pivot high. So I'm in at 80 at 480. That's 75 points away. This is a trade worth taking because if my first scale's at 15 and then I go to break even, it's likely going to work. And if I entered in here, like I said, at 80, a little bit after the candle turns back green, my first scale occurs on the same candle I entered on. That's winning. That's like repeatable. That's repeatable. And like, again, that's inside the range. That's what makes it tough. The best trades seem to always be when we break in base outside of the range. And then you know that we have something good going on. But the unfortunate thing is that sometimes the range is like whatever the overnight range is, if we're looking at RTH, is it the orb high? Sometimes it's the 15-minute orb high, sometimes it's the 30-minute. It can be really tricky. But this one here, last one, same thing. Like I said, it broke lower and then it popped, right? Well, this is the start of the 1150 candle. So this tells me, like, I know for sure by looking at this candle, we broke lower and then we went the other way. So, like, even if I took that entry, right? Like, this is the one where it gives you like it's like the same thing. Somebody with the same mindset as me tried it once and then tried it again, and the sellers couldn't maintain control.
Okay.
Let me see if I can find any. Oops. Good examples where we get out of the range. Here's a big. This looks like a big trend day. Here we go. So here, because you are out of the range, right? So it pushes up. You're going into the open. You're into the open. And it flushes, right? And you do not get a candle by candle flip back long. So, really important to note. When you're here, you don't get a candle by candle flip back long. You see that like you've broken the overnight low. You have some wicks underneath, but you have some wicks above, and the EMAs are coming down because they're just a reflection of price history. They're coming down to you, and you're waiting for them to catch up. All right, and you're not able to even get back over the middle of the orb, and none of these candles are even breaking the prior candle's high. So yes, there are some people, even sometimes myself included, who are going to try a long scalp from here to here. And that pays 60, 80 points. Like, it's still a good long scalp. Then you get this doji candle is like showing you some indecision. And it's like, well, I don't have to take a trade. We are chopping. Let me wait and see what happens. The next candle is very telling. We broke over the high of the two candles before it and then closed back in the range. Could not flip CBC. Now I know it's still wise to be on the short side of things because now I know we failed. The bulls have failed, right? And the sellers are still engaging up here. So what's likely to happen? We just go down. So when that candle closed, that's where you'll learn just over like time. Okay, well, this looks like it's setting up for a bill breaker short. Bill breaker is from the 20s to the 80s. It's always that like 40-point range, and usually you scale for profit around the 0-0. But like again, even if you're just like, okay, let me wait and see, and you wait for this candle to flip back red, say you're in here at 13, 14. If you risk the current candle's high, you're risking about 20 points. You're risking about 20 points. Where are you really targeting? You're targeting low a day. So you're risking 30 points and you're targeting 70. You think you can get 70. It's a good trade in my book. And like I said, I'm gonna take some off of 15, but when I stop to break even, I'm gonna be good. Like I know I'm gonna be good here. Let's go 2-minute chart, find that. Yeah, right here. Yeah. So here's that candle at 1022. That was it the 10. Let me just make sure I got the right candle. 1020. Yep. So the first thing it does is moves up and it flushes back down. 20. Yep. 1022. Same thing. The candle closes here. Okay, sorry. So here's what it is. The candle closes here because sorry. We're looking at this candle here that it opens at 1030. So when the 1028 candle closes, it closes back down here. So now I've had move over the 2-minute EMAs to the middle of the orb, move back down, move over it again, a weaker move, and closing right here on this. It's hard to take this because you're like, well, we're outside 2-minute 20, whatever. And so if you don't feel comfortable taking this or you haven't back tested this or practiced this enough, right? And maybe you wait, you're like, well, we just went back down under the 2-minute EMAs. The 2-minute EMAs are staying strong. They're staying relatively far apart. Like, yes, I can see that like the bulls are trying to hold this general area, and the bears are trying to hold this general area, and we're just ranging, but the Bulls tried and then they failed, and they tried and they didn't go as high. So now it's like, I'm not expecting this range to hold anymore. I'm expecting this range to break. The range breaks, and you'll get times where Maple jumps in, or you'll hear people just jump in short if you're not in short already, and it knifes, and then it just does does this, dude. Like, this is tough right here because it's gonna pull back against you like 35, 38 points on this one
Right.
candle, But if you're down to a runner and you're like, all right, I'm going to trail my stop at the prior candle's high because I'm down to a runner, or you're like, all right, that's too much. It moves down here to 95. Well, I'll put my stop at the orb, and then okay, move it down, move it down. You move your stop down, move your stop down to here, and then maybe you take a stop here. So you get stopped at 53 at 153 from it's like 100 something, 140, 150 points, But
Makes sense. Yeah.
like a lot of this is just going to come with like screen time and back testing and review and understanding like, well, where do I really find the best setups, And so the fake out breakouts are hard because a lot of times you don't really know it's a fake out breakout and you're waiting for more confirmation and then it just zooms. And that's going to come with screen time, like watching price action here and understanding, all right, we're really slowing down, and like you'll see they're trying to move the price down and it's like bouncing off of like a brick floor and it's like not going anywhere. Um but like as far as like other setups, or really this is a long-winded answer. I think that whenever you can get a break in base setup like outside of the 30-minute orb or a pullback to the EMAs outside of the 30-minute orb, you're going to have the best success. Like this is a really aggressive move, and you don't want to be going short anywhere out here because you're extended from the EMAs. But when it gets back in here into this 10-minute 9 EMA area, especially here, it's back at the 10-minute 9 and it doesn't flip CBC. Well, okay, like I can go long here and if I'm sorry, go short here. And if I just wait for it and it starts to come back down, I'm short at 40s, targeting around low of day. Well, that's like a 60-point move, you know? And most of the time, and you'll find this if you go back and study, most of the time, when you get outside of the range, your first candle by candle flip back like against, so like if we're trending down, it'd be the first long flip. It's usually a fake. It's not going to pan out. And like here, it doesn't pan out. So if you go and look at trend days when we get outside of the orb, uh you'll see it. Man, we haven't had many trend days, have we?
Not really. Not lately.
See if I can find some. Here you go. Like this. Like these are just weak little flips into the first EMA touch and it goes again. That's a good example. Oh, here you go. Really, really, really tight range. It goes back down. First candle, first flip into the EMAs. Like, yes, it does go a little bit higher, but ultimately you get the weakness. It's back under the 10-minute nine. This is a short it, risking the highs. And holy smokes, this was an enormous range day. Jeez, because this is dude, this is an 80-point risk here. Okay, so you got to be a little bit more selective on that or size down because the market's moving so aggressively. But just again, the point being, we break out of the opening range, we fall, we push back into the EMAs, and the first one's usually a flop. Stop loss and take profit strategies. I think honestly, the best way to answer that question is in the doc I sent you. Because I've literally got my entire risk management protocol on there. Whereas, it depends on the number of contracts I take, and then my stop loss is almost always 15 points. And then my take profits 15. So it's 1 to 1. And then stop to break even. And honestly, like when it gets, like I said, when it gets to about 12 plus, I move it up. And why do I move my stop up? Because if I'm already in profit 12 points, and my first scale is at 15 points. But my stop was at minus 15 points. The distance between where current price is and my stop is now 27 points because I'd have to go down 12 to break even and another down 15 to be stopped. So why would I, like logically, why would I risk 27 points when I'm only targeting 3 more with my full
Right.
position? You know what I mean? Like, because eventually you got to take a trade off. Like nothing is just going to run forever, and you're going to end up like giving something back if you play with runners, right? That's fine, but I'm not going to risk 27 points on my entire position when I'm only 3 points away from scaling. I'd much rather go to break even, and the amount of times that I take that break even stop is pretty low. Like it's pretty low, and sometimes it happens and it sucks, but it's pretty low. And I'm like, well, better safe than sorry.
Yeah, for sure. Yeah, I've got your rules right here. I've gone over them a couple times. So
Yeah, yeah. So that's like the best thing I think for like the stop loss and take profit strategies. I don't know how well Tradeovate does it, but I know a Ninja Trader does it really well. I also know that Ninja Trader's replay feature is incredible. Like it works really well. The downside to it is you usually only get one price update per second, and I'll let me boot it up and I'll show you what I mean. But you're only going to get one, like every second that ticks by, it's gonna change the price. Whereas like when you're live in the market, we're getting price changes like multiple times per second, especially when it's fast, and it'll be moving much faster. But pull that up. We're all cleared out. There we go. So like you can literally go to day. Play. Why is the chart not moving? That's fantastic. Try going back. Friday's open. That works better. Maybe it's just because it's the current day and it just ended.
right. Huh.
Wow. Well, way to make me a liar, because now it's not even working.
Right. If you pump them up, they rug pull you, man. So
Yeah. Huh. I know why. I downloaded NQ and not MNQ. And these are MNQ charts. Hold on.
gotcha.
Come on. Okay, well, maybe not. I don't know then. Pretty annoying.
If you're doing some maintenance or something, who knows?
Yeah, it usually works incredibly well. And that's like I said, that's what I really like. Works a bit. But what other questions or thoughts do you have? I can't believe we're already at an hour plus. I'm sorry.
No, no, it's been great infinite. I think for tonight that's good because it's a lot of notes and lots of them to go back over. I think anything else trying to tell me right now, I'm probably not going to absorb it all. So I think for this hour it's great. I'll go back and I'll watch it again and then I'll probably maybe follow up some more questions for you after the fact. But no, this was very good for a packed hour for sure.
Yeah, I'm sorry. Like I know I probably went like on and on and on, just talking about a lot of different things. Um,
Nah, it was all good info, all good info. So no apology necessary.
the biggest thing for me that's made the most impact is knowing what I'm looking for and staying away from everything else, right? And then when I find something that I'm looking for, just like when I find something that I'm looking for, just executing it and saying like, okay, like this is the plan, this is the trade setup I'm looking for, this is what I've been waiting for, and then going for it, Um,
Got
and like just staying away from I don't know why it's not working. That's super annoying. Um, just staying away from just crap. Like again, I like the 2 minute chart. Um, and for a bit when I was really struggling, and I tell this for new people too, for a bit, I wouldn't trade the open, right? Like I wouldn't trade the first 30 minutes of the day. I wait for the orb to get set up and you know, then I'd wait and see what happens and then take a trade from there. Um,
it makes me nervous. I sometimes when Maple's in a position at the open, like today with the gold, ended up being a home run. But uh, but yeah, I just get nervous because sometimes that initial spike right at the bell is so insane. If you're on the wrong side of it, it could you could be staring at digging out of a deep hole, 30 seconds after the market opens. So yeah, that's a little bit new for me to be in an open position at the open. That's something I've typically shied away from, but for the most part, it's worked out.
yeah. Yeah, it definitely can be stressful and it definitely can be really fast and sometimes it's almost like so fast that you can't think about, well, what am I supposed to do here? And if that's the case, it's just like you shouldn't be in, and it's much better to just wait and sit it out. And like this would be a day where, for example, okay, like now here we are on the 2 minute chart, and I roughly remember this. Here we are on the 2 minute chart. It's 9:58. This candle closed. Okay, we're in at 10 a.m. So at 10 a.m., we have broken over the pre-market high. So I'm like, okay, well, I'm looking for a pre-market high, breaking base, kind of like orb high, breaking base setup, right? Because we attempted to crack lower, we pushed up. We did crack lower, and now we went to the other end of the range. So what am I going to see? Right, next candle. Shoot, that's the opening candle of the next 10 minute. Like we just talked about. First thing you do is break higher and then reject and come back in the range. Well, that's not good. And then look what happened on the next one. So like, ouch. That actually was a fantastic short because it's like, well, that's a phobo. First thing we did on the first 10-minute candle is move up. Then we came back inside the range. If I went short here at 83, I'd be risking the high there, about 15 points. And it pays pretty fat. It pays almost 60. Okay, then we move lower. We come back up. So the 2 minute 20 is holding. Great. So this is like not good. I wouldn't have taken this long because we just had a very strong 2 minute candle moving down. I would not take this long. Other people take it. That's their prerogative. That's just not. I don't find that setup to be ideal when we've already rejected one. We've rejected breaking out of the range then we knife back down. I can't justifiably go long here because how do I know I'm not catching a knife that's just gonna keep trailing off? I
Right.
I
Right.
I feel like I vaguely remember this day because I feel like I remember Maple taking this or something like that. And then the next candle, like this is like a buy red, sell green type thing. It draws back down, it starts to pop back up. But like when it's drawing back down, how do I know it's gonna drop? Like it's not just gonna keep going, you know? I don't like this setup personally. So I stay away. The next candle, we break over the orb high again and we knife down again. Like, no way am I taking that long. No way. Like, no way. This doesn't look good. I'm thinking short. I'm thinking we're gonna go to the other end of the range. You know? Oh, look what we do. Go to the other end of the range. So so a lot of people they ask me, Joe, how do I know that that 2 or 3 minute 20 pullback is a good one to take? And how do I avoid the ones that are likely to be losers? This is how to avoid one that's likely to be a loser because of the order of operations. We broke the pivot higher and then look very strong bearish candle. Yeah, I missed this little scalp move or whatever. Fine. Can't predict that because at the time, all I had to go off of was that. That doesn't look good, right? At the time, now I got a very big engulfing 10-minute candle. Remember that that 10-minute candle opened, this prior one opened here. So prior to that, here's 10-minute candle. The 10-minute candle is this. Here's the open, here's the low, you know, here's the high of it, here's the close. So I have a very strong looking 10-minute candle. Let me just see if I can actually find it. Where am I? Further back.
Still here. I just turned my camera off. There's going to be some traffic coming in behind me.
Oh, no worries. Yeah, no worries. Actually, your camera's not in the video too, by the way, just so you know.
Oh, okay. Okay.
Yeah, I didn't know you felt comfortable or wanted people. Yeah, here we go. This is where we're at. So this is a 10-minute candle. Look at this. Like breaks the lows, very strong 10-minute candle. But now the first thing we saw was it broke higher and it's rejecting. And now I got the candle low is sitting like the current 10-minute candle low is sitting here. That doesn't look good. Like that doesn't look good at all for me to try along. And this is just one of those examples where like you get a 10-minute candle and people would look at it and say, oh, we broke the high, we came down lower and we closed here. Well, no, in actuality, what we did inside of that candle, was we opened here, we broke the high, we came down, we made the candle with the current candle is low. We moved higher, we came back down, and we closed here. So we actually made the low of that candle for like 4.5 minutes, almost 6 minutes before we actually closed that candle. Just the way the candle went boop, boop, boop. Like, and again, if that's what I have going off the 2 minute chart, that doesn't look good. Like, it's a tough short to take because you're like, oh, where do I put my stop? You know, but when you're back down underneath the 2 minute, like the 2 minute 20 here, it's like, all right, well, I can sell green inside these EMAs, risking this candle's high that's about 20 points away, or wait for it to push up and then come back down under here. Because now I know, hey, we tried to push and we came back here. And it might be one of those things where it goes like this a couple times in there. But we tried to push, we failed, we're coming back down. All right, I'm gonna take a short here. And I'm gonna take a short here, and I'll risk this candle's high, or I'll risk the 15 points or whatever. And boom, like I'm in profit on the same candle. In profit on the same candle. I've scaled at least once on the same candle. Move my stop down, trail along the way, and I'm good. Like I'm good. This comes down here, weak orb low break, closes as a doji. I don't care if I got my stop. I move my stop down to right here because we fulfilled the full bill breaker down here too. So that's like another thing. It's like, all right, we hit the bill breaker down here too. That's another big target hit. We're likely to go back up. Where do we go? We go to the other end of the bill range, like 100 points higher. So if I entered in here at 327, like I'm totally fine taking a stop out over here for 117, 100 and whatever it is, 115 points on the runner.
Now, Joe, can I assume that when the significance of the bill breaker in House of Stacks is similar to like intent at the psychological level. Is that kind of the same
Mhm. Mhm.
same
Yeah.
psychological? Okay,
Yep. Yeah.
okay,
And it's almost kind of like when they talk about the MTF magnet, like,
right,
like Maple has taught, if the 20s and or if the 70s and 80s fail, like if you're short and you're short in here and the 70s and 80s fail, like in this range, if the buyers fail here, we likely go to the 20s or 30s and boom, that's like right where we are in like 5 minutes, you know? And then they get the bill breaker and then all right, once the bill's fulfilled, that's a big target. And you have to just consider the overall market structure. We have moved down with significance and very quickly. We have broken not only broken like two bill breakers here, we got a bill breaker fulfilled here at 180, right? And then we've also broken the orb low, right? And then we just look at like, well, where are we? We moved into this pivot. So now it's like, all right, well, there this could be a demand zone, right? This is uh, yeah, this is the London orb high, actually. So your London, let me go back to a 10-minute chart, it'll be easier to see. That on that particular day, this was your London opening range. So I'm gonna turn it back down. This was your London opening range. Oh my god. So when you get back in here, what are you doing? Like you're just retesting these buyers that helped you break out of London's orb high. So like that's all right. This is demand. So I'm in demand. Can't short in demand. You shouldn't go short in demand. You should be taking profits, scaling along the way, moving your stop, and being prepared for buyers to step back in because like it's not that at every level or whatever you're going to see buyers step up and it's going to reverse the market or turn the market, but there's likely that there's resting orders or that there's liquidity or that you're going to get a bounce or the major market participants are thinking, hey, let me take profit here. So that because I mean, when you're short and you take profit, it's a buy order. So when a lot of people start taking profits here, it's a lot of buy orders. It's going to pop back up. All those things are bound to happen, right? But ultimately, too, like we are in a bull market overall, and the market by design, like if you zoom out, you are always in a bull market, right? Because like it might be a weekly bear market, but then the monthly's bullish, or it might be monthly bearish and then the quarterly's bullish. Quarterly might be bearish, but the yearly's bullish. This year might be bearish, but the last decade wasn't. You know what I'm saying? So you you're
right,
always you're always in a bull market. So like when I'm short, I'm just always like, hey, where are these bulls hiding out? You know what I mean?
right. I understand. Yeah,
And like I think that's one of the things about trading micros, especially trading micros on prop, is you kind of get to this point where it's like, well, like I'm in profit fat on this trade. I've scaled out, like for me, if I had a full position of 16 cons and I've scaled all but one of them out, I'm in fat profit and I'm moving this stop down. It's just like I don't care. Like I literally don't care. The market will give me what it gives me or it won't, and that's it. And I'll get trail stopped or it'll keep going and I'll keep moving my stop down. And because you know why I don't care? Because this will happen again in the future. And I am never going to catch the top or the bottom. That's not what I'm here for, you know?
understood. Yeah, understood.
Yeah. So wow. All right. We're well over an hour. I feel like I covered a lot. I probably might have melted your brain a little.
Been great. I've got a page and a half of notes, and I'm going to go back and watch the replay and see what I missed. And it's been very, very good stuff, Joe. I really appreciate it.
No problem. No problem. Do you feel comfortable with me sharing this like with everybody or because I think other people in the House of Stacks will benefit too.
Yeah, you can certainly share it. I've got no reservation.
Okay. And like I said, you're not on the video anyway, so they won't see you.
All good. Nah, I'm perfectly comfortable with it.
Cool, man. All right. Well, I'll get this uploaded to YouTube shortly. I'll send you the link when it's ready. And then let me know if you have any follow-up questions. And we can try to do this again in the future. And maybe honestly, we could just do it like on the House of Stacks stage if you wanted, and then people can tune in and we kind of I know you're newer to the House of Stacks, but we've done plenty of study sessions like that in the past where maybe myself and one or two other people are having a conversation. Other people might chime in via chat, and a lot of people are listening and taking a lot away from it live, you know?
Yeah, yeah, for sure. I'm going to take some time to absorb all this, and so I'll be a little bit more knowledgeable, ideally, next time.
Okay.
But yeah, I'd be happy. I'd be happy to do it in a forum like that.
All right, great, man. Well, good luck, and hit me up if you need anything, and we'll be in touch, dude.
I can't thank you enough, Joe. Appreciate you, man.
No problem, dude. Talk to you later.
All right, talk to you soon. Bye bye.